हाँ जी दोस्तों, क्या हाल है क्या हाल है क्या हाल है। आई होप यू आर ऑल डूइंग really well, wherein we are going to revise each and every chapter, so you can find that playlist chapter wise and watch whichever chapter you are not comfortable watching. Okay, whichever chapter you are not comfortable with, you watch that playlist and you'll be able to get your comfort. Okay guys, are we ready to start this revision? Are we quickly ready to start this revision? Can you hear me? Are you able to hear me so that I'll start the revision? Tell me very quickly, come on. Yes sir. Okay, perfect, guys. All right. All right, guys. So today we are going to start a very brand new chapter, which is prospectus and allotment of securities. This is going to be 100% English revision for any student who understands Hindi. In my channel, you can find rapid revision that is again in Hindi. But for this is exclusively for you students for whom English is more comfortable, and this is going to be in 100% English. Okay, guys. So let's begin prospectus and allotment of securities. This chapter starts from section number 23 and goes on till section number 42. Okay, so let's begin, sir. What is section number 23? Section number 23 talks about two things. What is public offer and what is private placement? What is public offer and what is private placement? So section number 23 talks about two things. You might find some internet issues in between, but be a little considerate. You might find some internet issues in between. Okay, that should be okay. Wait for it and I'll be back. Okay, now listen to me very carefully, guys. Sir, what is section number 26? Section number 23. Section number 23 talks about public offer and private placement. Sir, what is public offer? What is private placement? So public offer is where you go to the public at large, and private placement is what we will study in section number 42. So basically, if you are a public company, how can you raise money, sir? If you're a public company, you can go for public offer also or a private placement also. That is public offer as in through prospectus to public. But however, in case of a private company, you cannot make public offer. You can only make private placement. You can only do private placement. Now the question is, what is public offer, sir? Sir, public offer means IPO, FPO, OFS. Everything will be considered as public offer. Initial public offer, further public offer, and offer for security. All these things will be considered as public offer. Sir, this is the point. The only point that you have to understand here is public company can make public offer also, private placement also. But private companies can only make private placement. They cannot make public offer. After that, coming to the next point, security. Sir, what is the definition of security? So basically, security, you have to ensure that you remember this. Securities includes bonds, debentures, shares, and units of mutual funds, units of collective investment schemes, and a lot of other things. But one thing is not included in security, and that is security shall not includes a unit of unit-linked insurance policy. So unit-linked insurance policy, the units of ULIP will not be considered as a security. This might come in your exam as an MCQ. After that, guys, what is the definition of prospectus? Prospectus means basically any documents described or issued as a prospectus. If I give you a piece of paper and I say this is prospectus, then according to law, this is prospectus. And it includes red herring prospectus, shelf prospectus, or any other notice circular inviting offers. From any notice based on which you are asking offer, that will be considered as a prospectus. So prospectus is a very vast definition. Anything that you call as prospectus will be considered as prospectus. After this, that guys, coming to the next section, which is section number 24. Section number 24 is a very simple thing. It says that if you are a listed company, or if you are in the process of listing, if you are a listed company or in the process of listing, then for laws relating to issue of securities or transfer of securities or non-payment of dividend, if there are laws to be made relating to that, you will have to go and follow SEBI. You will have to go and follow SEBI. You will have to go and follow whom? You have to go and follow SEBI. Are you with me? Are you with me? Sir, you will have to go and follow SEBI in case where there are issues relating to issue of shares or transfer of securities or non-payment of dividend. In that case, you will have to go and follow SEBI. You will be regulated by SEBI. Sir, not an important section. Now coming to the next section, which is not even that important but relatively easy, sir. Sir, what is section number 25? Section number 25 says, it talks about deemed prospectus. Sir, what is the provision? It says that if a company allots any shares with a view that, with an intent that such shares will be offered for sale to public. If a company allots any shares with a view that such shares will be offered for sale to the public, then the document through which such offer for sale is made, that document will be deemed to be a prospectus. The document will be deemed to be a prospectus. So a document through which offer for sale is made. will be considered as a deemed prospectus. So what did I say? Where the company allots the shares with a view that such shares will be offered for sale to public at large, then the document through which such offer for sale is made will also be deemed to be a prospectus. Now, sir, there is a point that with a view to offer for sale such shares to public. With a view, the company has to be of a view that it is going to be offered for sale to public. Then how do you prove that view, sir? So law takes two presumptions. Law says in two scenarios, we are going to presume that the intent was to make offer for sale. Sir, what is that two scenario? If you look at that, the two scenario is that number one, the offer for sale is made within 6 months from allotment. As soon as the company made allotment, the OFS was made within 6 months. That is clue number one. And clue number two is that whenever the offer for sale was made, the whole consideration has not been paid. So when the company gave you an allotment and you made the offer for sale, when you made the offer for sale, you had not given the full consideration, in which case what will happen? In which case it will be presumed that the intent was to make that offer for sale. There was no other intent. There will be a presumption, but that presumption will be unless the contrary is proved. Okay. Now, sir, what will happen if this is a prospectus? So you said, sir, this OFS document will be considered as a prospectus. How will it affect? Sir, the effect will be, sir, section number 26 will apply. What is 26? Matters to be stated in a prospectus. Section 34 will apply. What is 34? It's criminal liability. Section 35 will also apply. What is section 35? 35 is civil liability. So all these three sections will apply. And sir, the person named in the OFS, whatever person is named in the OFS will be deemed to be directors of the company. They will be deemed to be the directors of the company. So basically, these are the things that is going to happen. Now, after that, listen to me very carefully. So now, once you have decided that the document through which offer for sale is made will be deemed to be a prospectus, now what you have to do, sir, whatever is to be stated as per section 26, that you will have to definitely state in the prospectus. But apart from that, you will have to state two additional matters. You will have to state what is the net amount of consideration received. What is the net amount of consideration received? And number two, what is the time and place at which the contract for allotment of securities may be inspected? Number one, what is the net amount of consideration received? And number two, what is the time and place at which contract for allotment of said securities may be inspected? So number one, net amount of consideration. Listen to me very carefully. If you do not listen to me, you are not going to be able to remember it. You are not going to be able to remember it. Please listen to it very carefully. What did I say? I said that, sir, the net amount of consideration received, and number two, time and place for which the contract for allotment of the said securities may be inspected. So time and place you will have to give. And the last one, sir, please listen to me. Who will sign this deemed prospectus? In case of a company, it will be signed by at least 2 directors. And in case of a firm where there are partners, it has to be signed by at least half of the partners. At least half of the partners means what? If there are 10 partners, out of those 10 partners, at least 6 of them will have to sign. No, sir. At least half means out of 10 partners, 5 at least will have to sign. Even if 5 people sign, it is fine. Okay. Remember that at least half of them have to sign, and this is the concept of deemed prospectus. Sir, what is deemed prospectus? Which by naturally might not be called as prospectus, but because of the deeming provision, we are calling it as a prospectus. After that, guys, listen to me very carefully. What are the matters to be stated in a prospectus? Sir, what are the matters that you are going to write in your prospectus? Listen to me very carefully. Sir, number one, your prospectus should be dated and your prospectus should be signed. It should be dated and signed. There should be a date in the top right corner and there should be a signature. So the question is, who will sign such prospectus? The answer is, it has to be signed by all the directors of the company. Not at least half. It has to be signed by all the directors of the company. It has to be dated and signed by all the directors of the company. Sir, what is the relevance of the date? Why do we have to put a date to the prospectus? Because the date of the prospectus will be the deemed date of publication. It will be deemed to be the date of publication. Whatever date you have mentioned in the prospectus, that date will be deemed date of the publication of the prospectus. Are you with me? Guys, are you with me? Can you hear me? Yes, sir. Okay. Sir, can you hear me? Yes. Kindly keep participating. Sir, please tell Raja in English. Okay. Raja, in English. Listen to me very carefully, guys. Please listen to me very carefully. Sir, keep participating along with me and keep speaking along with me. Sir, the prospectus has to be dated and signed. The date will be the deemed date of the prospectus, the deemed date of the publication, and signed will be signed by all the directors. All the directors have to sign it. Apart from that, sir, what will you write in the prospectus? So I said in the prospectus, you will state all the information and the reports, financial reports, as prescribed by SEBI in consultation with CG. So all the reports and information that's prescribed by SEBI in consultation with CG, but as long as SEBI does not prescribe it, whatever SEBI regulations are already made, those regulations will apply. So you have to give every reports that SEBI speaks in consultation with CG, but till the time SEBI gives its report, you will have to do what? You will have to comply with SEBI regulations. More importantly, you will have to write two things. Number one, a declaration that all the compliances are done. You have complied with this act completely, that declaration you will have to give, and a statement that nothing is contrary to this act, that nothing in this act is contrary. You'll have to give a statement that all the compliances, declaration that compliance is done, and a statement that nothing is contrary. So these are the things that you have to follow about a prospectus. But now listen to me very carefully. This subsection 1 will not apply in two cases. Number one, where the issue is to existing member or debenture holder, or where the issue is uniform with the shares or debentures previously issued and are currently quoted in the stock exchange. So what am I doing, sir? If I have already issued one share and that same shares I am issuing again to my existing members, then in that case I don't need to comply with subsection 1. And number 2, if I have already issued that class of shares and that shares are also listed on a stock exchange and now I'm issuing it to new people, also then I don't have to give any sort of declaration. It is not, in that case, provision 1 is not applicable. After that, sir, listen to me very carefully. Sir, why do you have to give a date? Because that date is deemed to be the date of the publication. After that, sir, what will you do? Once your prospectus is ready, you will have to file that prospectus with the ROC. It has to be filed with the ROC. And once you file it with the ROC, the validity will start. And that validity will be for 90 days from the date of delivery. The date you deliver it to the ROC, that is when validity will be starting, and it will be valid for 90 days. Sir, now what about expert? What if there is an expert statement in the prospectus? Guys, this is a revision and not a regular class. Let me tell you, if you want classes, the classes are separately there in English also. 100% English, recorded, not dubbed. It is original English. You have to take that classes, but this is revision. You have to focus on revision, sir. What if your prospectus includes an expert statement? If there is an expert statement, what will you do about it? Guys, listen to me very carefully, sir. If your prospectus includes expert statement, listen to me very carefully. In that case, you have to ensure that the expert is not engaged in the promotion, formation, or management of the company. Number 2, the expert has given his written consent, and such written consent is not withdrawn by the expert. And a statement to that effect, a statement that the expert has given his written consent and not withdrawn such consent, will be written in the prospectus. So I said 3 things. Number 1, the expert is not engaged in the promotion, formation, management of the company. Number 2, the expert has given his written consent and such written consent is not withdrawn. And number 3, a statement to that effect is included in the prospectus. If all these 3 conditions are satisfied, you can comfortably include an expert statement also in the prospectus. This was your section number 26. Now coming to the section number 27. Sir, they have been asking a lot of questions around this section. What is this section 27? Very easy. So you had issued the prospectus. Now in that prospectus, you had written some terms and everything. Now if you want to vary those terms, or if you want to vary the objects that you mentioned in the prospectus, so any variation that you have to do in the prospectus after allotment, you're doing it after allotment, then in that case, what you have to do, sir? In that case, 4 conditions are to be complied with. Number 1, pass a special resolution. Number 2, give a details of such resolution in the newspaper and website. Which newspapers are 2 newspapers, English language and vernacular language. Vernacular language as in local language. Of which area, sir? Wherever your RO is situated. So you will always give advertisement in 2 newspaper, English and vernacular. Vernacular will always be in the language where your registered office is situated. The third one being, you have to also give resolution details in the website. You will have to give justification as to why you are making changes. Number 3, sir, you are changing your objects, right? But you cannot use that money. You cannot use that money for dealing in equity shares of listed company. You cannot trade in equity shares of listed company. And number 4, all the dissenting shareholders, the ones who refused, the ones who were not happy with the variation, will be given an exit offer. Who will give them the exit offer, sir? Sir, the promoters or the shareholders of the company. And what will be the price of the offer? That will be as per SEBI regulation. That will be as per SEBI regulation. So basically 4 conditions. Pass a special resolution. Publish the details in the newspaper and the website. Number 3, sir, you cannot use that amount for trading in listed shares or equity shares of listed company. Number 4, the dissenting shareholder will have to give an exit offer. Are you with me? Yes, sir. So these are the 4 conditions that you have to comply with. Now listen to me very, very carefully, please, guys. Guys, listen to me very carefully. Sir, a few minor details like, sir, you remember how you had to put an advertisement in a newspaper? That will be done in a format which is called as form PS1. Okay. Now next point, sir. What is the special resolution all about? Sir, the special resolution will be passed in a postal ballot. You know postal ballot, right? Section 110 of the Companies Act. So you will have to pass a resolution via postal ballot, and in that resolution you will have to give all the details. What details, sir? The amount raised, how much is utilized, how much percentage is achieved, how much amount is yet to be utilized, what am I changing the object for? Earlier, what did I used to do? Now, what I'm doing, and why am I changing my business? What is the risk involved? All these things I'll have to give I'll have to give for my special resolution. So basically, I'll have to tell a lot of details. I have to tell a lot of details. Are you with me, guys? Are you get with me? Yes, sir. These are the 4 conditions that you have to comply with, section number 27. And I told you all the details. Like, you will have to furnish PS1. You'll have to give all the details. The SR has to be passed in a postal ballot. And these are the 4 points that you need to remember. If you look at the book, I think this is a book that you must have. You can visit shubhamsinghal.com and you can get this printed for what you can get it delivered colored copy for 700. If you don't want to get the colored copy, take black and white. You'll go to any shop, they'll give you black and white for 450 or 500 rupees. But I think for 700, you should get the colored copy, because the question bank is also colored coded. And the most important part is for section number 27, you see 18 and 23. That means 2 questions are associated with section number 27. So basically that will help you. So not a single student should you go to the law exam without this book. This is absolutely mandatory for you. Okay, guys. Okay. Now coming to the next section, guys, section number 28. What is section number 28? The section number 28 talks about offer for sale. So how does an offer for sale happen, sir? Certain members of the company, they authorize the company to do the offer for sale on their behalf and take the money and give it to those shareholders. Now, once the offer for sale is done, the members will reimburse the company for all their expenses, whatever expenses that company has incurred. But what is offer for sale, sir? Where certain members of the company propose in consultation with the board to offer whole or part of their holding to public. Whole or part of the holding to public, then the members shall collectively authorize the company to take necessary action, and then they will reimburse to the company for all the expenditure. They'll give the reimbursement. Moreover, sir, the document by which offer for sale is made to public shall be deemed to be a prospectus. It will be deemed to be a prospectus. Are you with me? Are you with me? Yes, sir. After that, listen to me. However, there are certain exceptions. Like in case of offer for sale, what is the basic exception, sir? Listen to me, and only the points that I'm telling that you need to remember. Number 1, sir, the provision of minimum subscription will not apply. You remember how minimum subscription was given in the prospectus, which used to be 90%, that is not applicable. The provision of minimum application money is not going to apply. Minimum application value is not going to apply. And number 3, the provision that board has to give report on the utilization of the money, that report is also not applicable. Because why? In offers for sale, what happens, sir? This is a member. This member wants to sell his shares through company to the public at large, right? So the company will take the money and give it to the member. So for example, the company took 50 crore. Where is it going? It is going to the member. Who is going to use it? The member is going to use it. So the company's board of director does not have to give a report on the utilization. They don't have to tell us how did they utilize the money, because they did not utilize the money. The money was utilized by that other person. Are you with me? Are you with me? Yes, sir. Now let's move to the next important section, which is section number 29. Listen to me very carefully. Please, guys, I need your 100% attention. I'll make section number 29 very easy for you. Sir, what is section number 29 all about? Listen to me. Look at the screen, and that should be it. You don't have to read from the book. Look at the screen. Okay. If you want, you can write it down along with me, but look at the screen. Okay. Sir, what is section number 29 all about? It talks about dematerialization. Okay. It talks about demat. Okay. Now listen to me very carefully. Sir, one is listed company and the other one is unlisted company. Guys, for listed company, what we said, boss, everything has to be demat, but who will take care of you? SEBI will take care of you. We don't have to worry about it. But then for unlisted company, we divided into 2 parts. We first attacked public company and then we came on to private company. We said private companies, first what did we say? That you can have your shares in demat form or in physical form, whatever you want. But sir, with effect from 2025, for private company also, we have given a deadline and we are saying that no, boss, you cannot issue it in a demat. You cannot issue it in a physical form. The shares has to be in demat only. But for private company, it is yet to become applicable. So let's talk about public company. We are talking about UPC, which is unlisted public company. We said, sir, the unlisted public company should issue all the securities in demat form. Whatever shares they are issuing, they should issue it in demat form and also facilitate dematerialization. Facilitate dematerialization as in or do any sort of right issue, etc., if you want to do these things, then please ask your promoters, your directors, and your key managerial person to get all the shares or buyback or right issue anything. Please ask your promoter, director, key managerial person to get their shares dematerialized. Are you with me? Guys, are you with me? Can you hear me loud and clear? Can you hear me loud and clear? Yes. Yes, yes, yes. Okay. Are you sure? Okay. Sir, so this was about unlisted public company. After that, we said that if there is any member who wants to transfer his shares or apply for any upcoming shares, then he will also has to get his shares dematerialized. And for these members, we kept a deadline of 2nd October 2018. We said after 2000, give a facility for dematerialization. Sir, what is the facility for dematerialization? You will need a team of 3 people. D, R, S. Sir, what is D? Sir, D is depository. What is R? Sir, R is registrar to an issue. And S, sir, S is a share transfer agent. S is a share transfer agent. So these are the 3 people that we would need. These are the 3 people that we would need. Please listen to me very carefully. These are the 3 people that we would need. Now, after that, why is there so much of lag? Yeah. Okay, perfect. All right, sir. So he said there are 3 people that you need to take care of. You need to take care of depositories. You need to take care of registrar to issue and share transfer agent. Sir, you will have to give them fees. You'll have to give them annual fees, monthly fees. You'll have to give them deposit. Can anyone tell me, sir, how much security deposit has to be given? How much security deposit is to be given? Sir, whatever fees you are paying, 2 times of that fees. Whatever fees you are paying, 2 years fees, basically not 2 times, I would say 2 years fees will have to be given as a security deposit. And sir, the facility, you will have to give this facility, and then you will have to inform every shareholder that, guys, we have given you a facility, and if you want, you can go to this people and you can get your shares dematerialized. Now, if anyone has any problem with these DRS, for example, if any shareholder has any complaint, then he can go and give his grievances to IEPF authority. He can go and talk in front of IEPF authority. They can go to the IEPF authority and complain about the depository registrar or share transfer agent, and the depository registrar, the IEPF authority will take action against them. Okay. So this is the whole provision of section number 29, sir, which we understood in a scribble manner. You don't have to read these things. Whatever I told you, that is more than enough, and basically everything gets covered. Everything gets covered. Also, please understand that you will have to also obtain an ISIN number. What is ISIN number? International Security Identification Number. And that number will help you get what? That number will help you dematerialize your shares. Okay, guys. Now coming to the next section, sir. What is the next section? The next section is advertisement of the prospectus. So a very basic, not important section. Sir, what is the prospectus? So if you are giving the advertisement of the prospectus, then you will have to share certain things which are written in the memorandum. For example, name and address, that everyone knows. But apart from that, object clause, sir, your liability clause, your share capital clause, your subscribers to the memorandum, all these details you will have to give in the advertisement of the prospectus. So in the advertisement of the prospectus, it is necessary to specify the contents of MOA as regard to object, liability, authorized share capital, subscribers, number of shares, and capital structure. All these things you will have to disclose in the newspaper. Are you with me? Sir, are you with me? Yes, sir. After that, guys, what did I say? Let's move to the next 3 sections. The next 3 sections are super important and relatively very easy, sir. Next 3 sections are about the kind of prospectus. First, we are going to read. Sir, first we are going to read shelf prospectus, then we are going to read red herring prospectus, and then we are going to read about abridged prospectus. So listen to me very carefully. Sir, section 31, 32, 33. I need your 100% attention. Here we go. So section number 31 talks, guys, before we start, if you're watching the video till here, can I just request you to put a like on this video? We'll keep a very basic target of, let's say, 200 likes on this video. And I would want you to, everyone who likes this video, let me put it this way, I will pray to God that they give you, 5 marks extra in law paper. That would be my blessings for you, for everyone who likes this video. Let's keep a target of 200 likes. That's it. But what happens is these kind of videos takes a lot of efforts, and I want you to recognize that efforts. And you liking this video will give this video a significant reach. So that is why kindly make sure that you're doing that. And now let's continue. Okay, guys, listen to me very carefully. Sir, section number 31 talks about shelf prospectus. Shelf prospectus means what? Sir, shelf prospectus means, sir, a prospectus in which the securities mentioned therein can be issued in one or more issue over a certain period of time without the need for further prospectus. So I don't want to issue prospectus again and again. I'll issue a prospectus. Based on that prospectus, I'll make multiple issues over a certain period of time. That is called a shelf prospectus. And there is no need for a further prospectus. Sir, what is the provision related to shelf prospectus? Not every company can issue shelf prospectus. Only specified class of companies, only what did I say? Sir, any classes of companies as specified by the SEBI may file shelf prospectus with the ROC. So only specified companies can file shelf prospectus. Sir, when will they file? Sir, at the stage of the first offer, they'll have to give to ROC. And once they submit the prospectus, in that prospectus, they will have to mention a validity of the prospectus, and that validity will be up to 1 year, not exceeding 1 year. That validity will be up to 1 year, not exceeding 1 year. Are you with me? Yes, sir. Sir, the validity will commence from the date of opening of first offer. It will commence from the opening of the first offer, and second or subsequent offer, no further prospectus is needed. So the validity part is very important. What will be the validity? Sir, the validity will be mentioned in the prospectus, but it will be up to 1 year, and it will start from the commencing of the opening of the first offer, not from the delivery to ROC, from the opening of the first offer, and no further prospectus is required. But sir, your further prospectus is not required. But when you are going for a second or subsequent offer, you will need a different document, which is information memorandum, which will be in form PAS2. Information memorandum will be in form PAS2. So what about PAS2, sir? Sir, PAS2 basically says that whenever you are going for a second or subsequent offer, 1 month prior to that offer, you will have to give details of the CFO. What is CFO? C, sir, whether any new charges. Come on, remember along with me. You'll have to give details of CFO. 3 things. CFO. C, new charges were created or not. F, any change in the financial position of the company. And O, sir, any other changes as may be prescribed. CFO. So basically these are the 3 things that you need to put in the information memorandum that you are going to issue 1 month prior to the issue for every second or subsequent offer. So shelf prospectus along with the information memorandum together will be deemed as a prospectus. It will be considered as a prospectus. Together they will be considered as a prospectus. Now coming to intimation of changes, listen to me very carefully. Sir, coming to intimation of changes, listen to me very, very carefully. Are you with me? Sir, are you with me? Adarsh Srivastava says, sir, could you please little bit Hindi? Guys, you guys can't find satisfaction anywhere. There is a Hindi video. Why are you not watching Hindi video? If you understand Hindi. If you don't understand Hindi, why do you need Hindi in between? Hare. Now you tell me how much percentage Hindi should I put? How much percentage? Am I AI to you or what, others? Huh? Nalayak. Use some brain. You are in CA intermediate, not in your CA foundation exams. Come on, Adarsh. I told you this is 100% English. Sir, little in Hindi, sir. Little Hindi, sir. Little. Kunchum, tokku. So now, listen to me, guys. Sir, I said intimation of changes. Please listen to me very carefully. Sir, what is intimation of changes? So for example, listen to me very carefully. In the application stage, that is the very initial stage, if there was a shareholder that gave me the application money and also gave me an advance, okay, but later on there were changes in the company and that changes were intimated to him. That was, you have paid the advance, but now there are changes in the company and we are intimating that changes to you. In that case, if you have given some advance and once you get to know about the changes, what you can do is you can ask for a refund. And once you ask for a refund, the company will give you a refund. Within 15 days, the company will give you a refund. If the company doesn't give within 15 days, the company will have to give you some interest also. So basically, where there is any changes in the company, where a company has received application for allotment along with advance payment, and the company will intimate any changes to the applicant, and if they desire to withdraw the application, the amount will be refunded within 15 days of such application. They will be refunded with the money. Okay, are you with me? Are you with me? Yes, guys. Sir, what is this? This is your provision. Do you understand? Hmm? Did you understand? Shelf prospectus plus information memorandum together becomes your prospectus. You have to focus on these 2 points very clearly. The validity will be up to 1 year, and apart from that, you have to give an information memorandum in form PAS2. Now coming to the second kind of prospectus, that is red herring prospectus. Guys, listen to me very carefully. What is a red herring prospectus? So red herring prospectus is basically a prospectus in which two informations are missing. Number one, the quantum of the issue and the price. The quantum of the issue and the price, those two things are missing. Now listen to me very carefully. It is not mandatory for every company to go for red herring prospectus. If you have understood this concept, only those companies which are going for 100% book built offer, 100% book built offer are going to go for red herring prospectus. No other company is going to go for red herring prospectus. Are you with me? Sir, so when you are a company who decided to go for red herring prospectus, then in that case, a company may make an offer for red herring prospectus. How? They'll have to file that red herring prospectus to ROC at least 3 days before the issue. And then what will happen? Sir, the issue will open, the issue will close, allotment will happen. Now, when the issue closes, within, sir, you will have to, upon closing of the offer, the prospectus, not the red herring prospectus, the final prospectus along with total capital raised and the closing price will have to be given to the ROC as well as the SEBI. So RHP was issued, based on that offer was opened and offer was closed. Once the offer is closed, you will have to finally submit the prospectus, which includes both the closing price also and the total capital also, and you'll have to file it with ROC and SEBI. Now guys, listen to me very carefully. Any difference between red herring prospectus and prospectus, the variations between them will have to be highlighted. The variations between them will have to be highlighted. This is your section number 32, which talks about red herring prospectus. And the last one, sir. So the last one is abridged prospectus. Sir, what is abridged prospectus? Listen to me very carefully. Sir, whenever you issue the application form, along with that application form, you will have to give an abridged prospectus. Along with every application form, there has to be an abridged prospectus, but there are two exceptions to it, not three. You can cut the third one, but there are two exceptions to it. Number one, where the issue application form is for an underwriting agreement, or where the shares are not offered to public. In these two cases, you do not need to give what? You do not need to give an abridged prospectus, but in other cases, you will have to give an abridged prospectus. Now, if anyone wants, they can request and ask for the full prospectus, but generally, abridged prospectus would be enough. And if there is a default, the company will be liable for 50,000 rupees of default. If there is a default, the company will be liable for 50,000 rupees of default. Are you with me? Sir, yes or no? Yes or no? Yes, sir. Are you sure? Are you sure? Alright guys, so this is your section number 33, which talks about abridged prospectus. After that, sir, coming to next two very important sections. Sir, I promise you that if you give me 100% attention, you have not studied these two sections the way I'm going to teach you now. So give me your 100% attention. Sir, what is section 34 and what is section number 35? I have simplified it to a significant extent. You just have to write down whatever is written on my screen and that should be it. You don't have to do anything else. Let's first understand what is section number 34. Section number 34 talks about criminal liability, and then section number 35, which talks about civil liability. Okay. Sir, what is section number 34? Sir, section number 34 talks about criminal liability. What is criminal liability? Section number 34, criminal liability, states that if a prospectus includes a statement that is untrue or misleading, anything that you have written in the prospectus that is untrue or misleading, then every person who authorizes such prospectus will be liable under section 447. Every person who authorizes such prospectus will be liable under section 447. However, please understand that this section is not applicable if a person proves that, number one, such statement or omission was immaterial, or he had reasonable ground to believe that the statement was true or the inclusion or omission was necessary. I'll explain it, don't worry. Sir, what is the first paragraph saying? Sir, the first paragraph is saying that if there is a prospectus, in that prospectus there is a statement, and that statement is basically untrue, as in it is a lie, or you are misleading with that statement. In that case, if the statement is untrue or misleading, then every person who authorizes such prospectus will be liable for fraud under section 447. Now, how can I escape this liability, sir? How can I get rid of this liability? There are two exceptions. If a person proves that the statement or omission was immaterial. For example, Reliance was making a report in that instead. So Mukesh Ambani's wife is Neeta Ambani. Instead of writing Neeta Ambani, he wrote Tina Ambani. Sir, it is that not that big a is it untrue? Yes, sir, it is untrue, but it is immaterial. So if you prove that the statement or omission was immaterial, no one is going to bother you. Number two, if you had reasonable ground to believe that the statement was true or the inclusion or omission was necessary. What do I mean? Sir, if when you were writing that statement, you thought it is true. If you prove that, then in that case, you can escape the liability. So two keywords, number one, immaterial, number two, necessary. True and necessary. These two keywords, if you remember, you will be able to write. Sir, what is RGTB? RGTB is reasonable ground to believe. Okay. Now coming to section number 35, sir, what is civil liability? What is civil liability? Sir, 34 was criminal liability where you have to give money, where you will go to jail and you'll pay fine. But 35 is civil liability where you will have to compensate. So what has happened, sir, if there is a person who has subscribed to the securities of the company, he has become a subscriber, acting on a statement which included or omitted in the prospectus, which is misleading, then and has sustained loss or damage as a consequence thereof. So three conditions. Number one, you have subscribed to the securities. Number two, acting on the prospectus. And number three, there is a loss or damage that you have incurred. Then in that case, the company and every person being, I would say, DAPE. What is DAPE, sir? Sir, director. Sir, director, any person who authorizes, sir, promoter, and uske baad expert, and after that expert. So director, any person who authorizes, promoter or expert, all these things will be what? All these people will be liable to compensate for the losses that person has incurred. You're not only going to jail, you're not only paying fine, but also you will have to compensate the person who has incurred this losses. But guys, listen to me very carefully. If this misleading statement was with an intent to defraud, the intent was that you're going to defraud, then in that case, if the intent was to defraud, then the person will have unlimited liability, sir, unlimited personal liability. Such person shall be personally unlimited liability to compensate. That means you will have to sell everything that you own and you will have to pay the money. But sir, is there a way I can escape this liability? Yes, sir, absolutely. There are three ways in which you can escape this liability. Number one, as a director, you have given your consent, but you withdrew the consent before the issue of prospectus. You had given consent, but you withdrew the consent before issue of prospectus. You will not be liable. Number two, sir, you are a person who were the prospectus was issued without the knowledge or consent, and as soon as I came to know about it, I gave a reasonable public notice. The prospectus was issued without my knowledge or consent, and as soon as I got to know about it, I gave a reasonable public notice. And the third one being, listen to me very carefully, sir, the statement. Listen to me very carefully. Sir, such statement was based on an expert's report. It was a true and fair representation of the expert's report. I had reasonable ground to believe that expert is competent. The expert has given written consent and such written consent was not withdrawn. In that case, I'll be liable. You didn't hear me. I'll tell again. I said, how can I save myself? If my statement is misleading, but my statement was based on an expert report, it was a true and fair representation of the expert report. Number three, listen to me very carefully. Number three, I had reasons to believe that the expert is competent. Number four, the expert had given written consent and not withdrawn it. So the mistake was technically of the expert and not mine. So I can get saved. So there are three exceptions based on which you can save yourself. This is section number 35. Sir, what is the difference between 34 and 35? 34 is criminal liability, 35 is civil liability. In criminal liability, you are going to jail, you are going to pay the fine. In civil liability, you are going to compensate also. Generally speaking, whenever you have to write an answer on section 35, 34 also gets subtracted automatically. So whenever there is a question regarding these sections, please mention both the sections. Okay. Now the second part, sir, listen to me very carefully. The provision starts by saying that where a person has subscribed to the securities of the company, where a person has subscribed to the securities of the company. Guys, listen to me very carefully. Person has subscribed. That means when I say person has subscribed, you will have to be very careful when it means that you have to subscribe and not acquisition. Subscription is different, acquisition is different. Subscription is you directly subscribe from the primary market, from the IPO, but acquisition is you get it from the secondary market. This provision is only applicable if you have subscribed acting on the prospectus. You have to subscribe to the shares. That was written in a case law called Peak versus Gurney. This was asked in your exam once. It says that the remedy under section 35, that is the civil liability, will only be available in case of subscription and not in case of acquisition. Are you with me? Yes, sir. Now bringing you to the next part. Sir, what is the punishment of fraud? You said he'll be liable under section 447. What is that liability, sir? Can you tell me? Yes, I can tell you very confidently. Listen to me. Sir, what is that penalty? You have to remember it like this. The penalty is, there is a limit. The limit is 10%, 1% of the turnover or 10 lakh rupees, whichever is lower. 1% of the turnover or 10 lakh rupees, whichever is lower. If the fraud is bigger than this amount, it will be considered as a big fraud. For big fraud, what is the liability? Sir, for big fraud, the liability is jail from 6 months to 10 years and fine up to 3 times of the amount of fraud. But sir, imagine if it is a big fraud, and what if public interest is also involved? Sir, if public interest is involved, it will be jail from 3 years to 10 years and fine 6 months to 10 months, fine up to 3 times the amount of fraud. But sir, however, listen to me very carefully. If the fraud is less than the limit, then it is a small fraud, and the fine will be up to 50 lakhs, or jail will be up to 5 years, or both. If it is a big fraud, it will be jail and fine both. But if it is small fraud, it is going to be jail or fine or both. Anything is possible. Okay, guys. Now, section 36, 37, not that important. Let's come to section number 38 is also not important. It is basically penalty. 38 is penalty, 36 is penalty, 37 is penalty, not that important. Coming to section number 39. What is section number 39? So, section number 39 talks about allotment of securities. Guys, are you with me? Are you with me? Are you enjoying the revision? Tell me in the chat, are you enjoying the revision? Yes? Yeah? Okay, sir. Listen to me very carefully. Sir, what is section number 39? Sir, section number 39 and 40 are very interrelated, very easy. Listen to me very carefully. Sir, what is section number 39? Section number 39 talks about allotment. Sir, when will you, after issuing the prospectus, your issue will open and your issue will close. After that, how will you decide whether to do the allotment or not? So there are two conditions, sir. Number one, the condition is that amount stated in the prospectus as minimum subscription has been received. You have to receive minimum subscription, and so the minimum application money has been paid by check or other instrument. So you have received the minimum subscription also. How much is the minimum subscription, sir? Sir, in 11, 12 standard, we must have studied that 90% is the minimum subscription. But actually, we will have to write that the minimum subscription as stated in the prospectus. That will be as per SEBI. So minimum subscription and minimum application money. Sir, what is the minimum application money? It shall not be less than 5% of the nominal value of the shares. Not less than 5% of the nominal value of the shares. If both these things are received, within 30 days, in that case, you'll do the allotment. Otherwise, you will have to go for refund. If these things are not received within 30 days. Sir, within 30 days of what? Within 30 days of the issue of prospectus. Now, sir, if you were to return, sir, you will have to refund within 15 days from the close of the issue. And if you fail to refund within 15 days, then all the directors and the officer in default will be liable for an interest of 15% per annum. The company is not liable. The directors and the officer in default are liable for the interest. Sir, this is what will happen if your application money and your subscription is not received. You'll have to refund within 15 days. If you do not refund, you'll have to pay interest. But sir, if your allotment is successful, then you will have to file a return of allotment with the ROC in form PAS3 within 30 days. You'll have to file that return of allotment within how many days? 30 days. In that 30 days, sir, you'll give all the basic information. All the basic information as in who are the allottees, what are the name, occupation, address, all the things you will have to give in case of what? In case of your return, in your return of allotment. Are you with me? Are you with me? Tell me yes or no. So this is your provision of return of allotment, section number 39. Either you go for allotment or you go for refund. If you go for refund, you'll have to refund within 15 days, otherwise 15% per annum. If you go for allotment within 30 days, you will have to file PAS3, which is return of allotment to the ROC. Coming to the next section, which is section number 40, which says that securities to be dealt with in the stock exchange. So basically, law says that before you issue your prospectus, you will have to make an application to one or more recognized stock exchange and obtain their permission. You'll have to make application and obtain permission. You'll have to make application to one or more and obtain permission from them. Okay. Now listen to me very carefully, guys, please. Now, once you have made the application, you'll have to mention it in your prospectus also that we have made applications to these and these stock exchange. Now, please listen to me. What about the application money, sir? Sir, whatever application money will come, that has to be kept in a separate bank account with a scheduled bank. That has to be kept with a scheduled bank. What will you do with that application money, sir? Sir, if at all you go for allotment, you'll adjust against allotment. Also, you use that money to refund, but you will have to keep it in a separate bank account. Now, guys, listen to me very carefully. Sir, what about underwriting commission? Can a company pay underwriting commission? Is a company allowed to pay underwriting commission? But before we come to that, let me close this thing. Sir, about the stock exchange. A very important question was asked in exam. Sir, if I make application just to National Stock Exchange, is it okay? Yes, sir. Sir, if I make application just to Bombay Stock Exchange, is it okay? Yes, sir. Sir, if I make application to NSE and BSE both, I make application to NSE and BSE both. In that case, sir, if you make application to both of them will have to approve. Let's say if NSE approved, but BSE said no, in that case, I cannot proceed because if I apply to two stock exchange, I need to get approval from two stock exchange. If I apply to one, approval of one is okay. But if I apply to two stock exchange, I'll have to get approval of all of them. Now coming to the last part, sir. What is underwriting commission? Sir, a company wants to give underwriting commission. Can they issue underwriting commission? Sir, for underwriting commission, you have to remember 6 conditions. How many conditions? 6. Please by heart this along with me. What are the 6 conditions? Number 1, sir. Sir, it has to be authorized by the AOA, the underwriting commission. Number 2, sir, what will be how will you pay the money? The money will be paid out of proceeds of the issue or the profits of the company. You'll pay it from the proceeds of the issue or the profits of the company. That is the source of underwriting commission. Number 3, what will be the rate of commission, sir? Sir, in case of equity, the rate will be 5% or rate as per AOA, whichever is lower. And in case of debentures, it will be 2.5% or the rate as per AOA, whichever is lower. For equity, the rate will be 5% of the, sir, the percentage will be of the issue price and not the face value. Remember that. So of the issue price, you will have to pay this percentage, issue price to 5% or AOA, whichever is lower in case of shares, and in case of debentures, 2.5% or AOA, whichever is lower. Now point number 5, sir, you will have to disclose certain things in the prospectus. That is the name of the underwriter, the rate of the commission, the agreement with the underwriter, all these things you will have to disclose. Point number 5, sir, listen to me very carefully. It should not be an offer which is not made to public. That is, in case of private placement, you do not get to pay underwriting commission. And the last one, sir, you'll have to file it with the ROC for registration. The underwriting agreement. When will you file it with the ROC, sir? At the time you're not listening to this. This will come in an MCQ. Sir, you will have to file along with the prospectus. When you send the prospectus, along with that, you will have to send this underwriting agreement for underwriting agreement. Are you with me? Are you with me? Are you with me, guys? Yes, sir. Sir, what is this? Sir, these are the 6 conditions that you need to take care of when you come to an underwriting agreement. Number 1, it has to be authorized by an AOA. Number 2, that the payment will be out of the proceeds of the issue or the profits of the company. Number 3, what will be the rate? The rate will be 5% of the issue price or the AOA, whichever is lower. Or in case of debentures, it will be 2.5% of the issue price and the AOA, whichever is lower. After that, coming to the 4th point, what is the disclosure? What is the disclosure? So the disclosure, what will you have to disclose? You will have to disclose the fact that, listen to me very carefully, what is the name of the underwriter, what is the rate and everything. And point number 5, public. Sir, if you are making an issue to public, you cannot give underwriting commission. And last one, sir, the underwriting agreement will have to be registered with the ROC along with the prospectus. At the time of filing of the prospectus, this is your section number 40 completed. Sir, one question was asked in exam. Sir, can you give underwriter, instead of cash, you said I'll give you a flat. Can you give such kind of things? Yes, sir, underwriting commission can be in cash also because there is no such restriction. So if you have to give in cash also, you can give in cash also, not a problem at all. Are you with me, guys? Guys, are you with me? Can you hear me loud and clear? Can you hear me loud and clear, guys? Tell me yes or no. Can you hear me loud and clear? Yes. Raja. Oh, Raja. Can you hear me loud and clear? Okay. So very beautiful revision. I'm very satisfied with the kind of coverage that we are doing. And in the next 10 minutes, we are going to finish also. In the next 10 minutes, we are going to finish also. That would be less than 1 hour, but that would be your complete revision of your private placement. I think it is going to be very helpful for you. Please make sure that you listen to these revision videos 3 times, 4 times in one go, so that you will be able to retain it better. So instead of, let's say you listen to this revision video 2 times. That would take you 2 hours, but then again, when you read on your own, you're going to spend 3.5, 4 hours to finish this small chapter. It is not worth more than 2 hours. Okay. Guys, now listen to me. Last section, 41, you don't have to cover. 41, you don't have to cover. Coming to the last section, which is your section number 42, which talks about private placement. Are you with me? Sir, section number 42 talks about private placement. Very important, sir. I'll tell you the very basic concepts of private placement. So what happens in a private placement, guys? The things that I'm going to tell you is going to be a good amount of revision. So what happens is, if a company wants to do private placement, then the board of director will identify some person called as identified person. A group of person that will be called as identified person. Sir, what will the company do? Sir, the company will send them a PPOCA form. What is a PPOCA form? Private placement offer come application form. Sir, there is a format for PPOCA form. This format is PAS4 and this form is serially numbered. This form is serially numbered. So those identified persons will get the PPOCA form. Please understand that these identified person will not have right to renounce. This PPOCA form cannot be renounced in someone else's name. Either you apply or you let it go. Now the question is, sir, to how many person can you make this offer? So law said that this offer can be made to 50% or such higher number as CG may prescribe. So CG prescribed a number of 200. So basically you can make this offer to 200%. But the limit is not so simple, sir. Focus on the 200. This 200 is in aggregate for a financial year. And this is for each kind of security, which means what? For equity 200 is the limit, for preference share 200 is the limit, and for debentures 200 is the limit. And this limit is an aggregate for a financial year, so you can issue to maximum 200%. Please listen to me very carefully. Please listen to me very carefully. You can issue to maximum of these persons. After that, listen to me very carefully. Sir, when you're calculating the limit of 200, you will exclude qualified institutional buyers, or you will exclude the persons who have received shares in ESOPs. These people will be what? These people will be excluded. But however, this exclusion is not applicable in case of a non-banking financial company or a housing finance company. In case of these companies, the exclusion is not applicable. So basically 200 people excludes qualified institutional buyers and ESOPs employees. But however, this exception is not applicable in case of NBFC and housing finance company. This is about the limit that I told you. Now, sir, if a company were to make a private placement, listen to me very carefully. The company will have to, first of all, pass a special resolution. Sir, for special resolution, they'll have to call a general meeting for which they'll send the notice and in which they'll attach the explanatory statement. In that explanatory statement, they have to give a lot of details as to whom are we doing this private placement, what is the issue price, what is everything. You'll have to give all the details. Okay, but you will have to definitely pass a special resolution. But guys, if the private placement is for non-convertible debenture and if the issue is within the limit of 181C, then in that case SR won't be needed, board resolution would be enough. But even if the limit exceeds 181C, then in that case 1 SR should be enough in a year. In a year 1 SR is enough. You don't have to pass multiple SR. We are talking about the special resolutions. So first we spoke about the number of members. Now we are talking about the special resolution, that generally special resolution is needed. But if the limit, if it is for NCD, non-convertible debenture, then the special resolution is not needed. Now guys, listen to me very carefully. Sir, again the same thing. You will receive the application money will be received. So what will happen? Sir, you issued the PPOCA form. Okay. They applied. How will they apply? They'll give you the application money. Sir, the application money, listen to me very carefully, that will be kept in a separate bank account with a scheduled bank. Separate bank account with a scheduled bank, and that money will be used only for two purposes. One would be adjustment against allotment and the other one would be refund. Now, what does the company say? Listen to me very carefully. Sir, once your issue is closed, it says that within 60 days, you go for allotment. You go for allotment within 60 days. If you are able to allot, then you file return of allotment with ROC in the form PAS3. Same form, sir, but you'll have to file this within 15 days, not 30 days, 15 days. Same format, but 15 days. Why? Because private placement, so less number of members. But if you could not do the allotment within 16 days, you will have to refund within 15 days. You will have to issue the refund. But if you fail to issue the refund, sir, you will have to pay interest at the rate of 12% per annum. Not 15%, 12% per annum. Please listen to me. And this 12% of per annum will start from the 61st day itself. If you do not pay within 15 days, then interest you will have to give from the 61st day itself. These are the things that is written in your private placement. Okay. One last thing, sir, and then I'll go through the section and see if anything is left. But one last thing, you have to realize that if there is a private placement that is going on, let's call it private placement 1. Then unless this private placement is completed or unless this private placement is abandoned, unless this is done, you cannot start a new offer. You cannot give a fresh offer. No fresh offer for private placement shall be made unless the prior offer has been completed or abandoned. Are you with me? Are you with me? Yes, sir. This is about your private placement. This is about your private placement. I hope you understand. Okay. Okay. Did you understand, sir? Yes, sir. All right. So this is about your private placement. Let me see if I missed any points. I think I have covered everything mostly. Yeah. Sir, one point, please note down that. Sir, please note down that. No offer shall be made to a body corporate, incorporated, or national of a country which shares land border unless his body corporate has obtained order of government order and submitted. So basically, you remember how company sends PPOCA to the identified person. Now, sir, for example, this person is an individual or a body corporate, but they are national of a country which shares land border with India. So if that person belongs to Nepal, Bhutan, Afghanistan, Pakistan, these all land, Myanmar, these are land border countries. There are 7 countries which shares land border with India. If that individual belongs to that particular national, then he will have to go to the government of India first, take approval, and then once he submits the PPOCA form, along with that, he will have to submit that approval also. Only then he gets to apply, otherwise he can't apply. Okay. So now listen to me very carefully. One point is very important. Sir, if a company makes offer to the public in contravention of this section, if an offer made under this section is not as per this section, it will be deemed to be an offer for public and part 1 will be applicable. Part 1 would be section 23 to 41. That would apply. So basically, if you are making a private placement, comply with section 42. If you fail to comply with section 42, it will be deemed to be a public offer. So now the question is, how will I get the application money? You can get it via check, DD or any other banking channel, but not by cash. Application money cannot be received in cash. So now listen to me very carefully. Sir, I told you that if one private placement is going on, you cannot start another private placement. Sir, if the first private placement is of equity and the other one is of debenture, can I do it parallelly? Can I do equity and debenture parallelly? No, sir. Irrespective of the security, you cannot do 2 private placement in one go. Only after the first one is completed or abandoned, only after that you can do this particular thing. Okay. Then what after that, sir? After receiving the application money, within 16 months, you go for allotment. If you fail to do the allotment within 15 days, you go for refund. If you fail to repay, then you'll have to pay an interest at the rate 12% per annum. Okay, you cannot make any sort of public advertisement, strictly prohibited. Sir, if you go for allotment, file a return of allotment in form PS3 within 15 days along with the details of the allottee. Okay, now sir, there are some defaults that you can see, the private penalties that you can see, and the last one, sir, you'll have to maintain a register in the form PS5, which is details of private placement. You'll have to maintain a register in PS5, that is details of private placement, and I think that is it. Okay. So there is one PA6 form that you need to remember, that if a company has dematerialized the shares, then 2 times every year. So once after the end of half year, within 60 days, you will have to file a return that will be in form PAS6. This I'm talking about section number 29, dematerialization. Consider reading section 2 for PAS6, and I think this question bank, this chapter is done for you. Sir, I really hope that you enjoyed this session. I really hope that this session was helpful for you. I hope that you're going to share it with your friends. And in order to make sure that I bring more revisions for you, I would need your motivation. Because if you are watching it, if you are enjoying it, and if you let me know how helpful it is for you, only then I'll be able to stay motivated to give you more and more videos. So please make sure that you let me know in the comment box that how these videos are helpful for you, whether you're finding it appropriate, whether you want it to be more detailed, whatever you want. I think detail is more than enough for revision. I don't think I can give you more detail than this in a revision video. Okay. And if you have any juniors, do make sure that you recommend my name to them, that if they are looking for any sort of fast track or to finish law in like 80 to 100 hours, they can definitely consider my 100% English classes. Okay, guys. And that is what brings me to the next line. You get what you give. Okay, Raja. I hope this video was really helpful for you. I hope you enjoyed it thoroughly. I'll see you in the next video. Until then, please take care. Make sure you like the video, and I'll see you in the next video. Until then, this is your CA buddy Shubham Singhal signing off. Bye-bye.